This is the briefing for Tuesday, April 25th. In last night's briefing, I talked about the fact that the markets were basically in multiple time frame counter, or not counter trend, but rotational patterns. I started out with this weekly chart of the spiders, and you can see the rotational pattern that's been occurring right through here. This basically going all the way back to November of last year. And then you can see shorter term, and I showed it on a daily basis, this rotation right here at the upper extreme of this area of rotation. And I went on to explain that a lot of times what happens is when you get a pause at a key reference area or a support or resistance area, and the the financial instrument is unable to break through either to the upside or the downside, depending on where that pause is that traders will realize that there's not enough strength in the market or in that financial instrument to drive it continuing in the direction of the most recent trend, in this case, this uptrend here. Then they'll begin to sell in the case of this here because there's not enough strength in the market to drive it higher, so the selling begins. And that's what I've been talking about for the last couple of weeks in terms of these briefings, is the fact that there's really not enough strength within the indices themselves. Now this is this couple week rotation up on a daily basis, and you can see the pause right through here, right around this 410 area. Now, what makes this important here is that this lower extreme of this area of rotation comes in basically around the 405 area, and we closed right at 406. So this does suggest that the probabilities are such that we're going to see some type of a continuation of a move lower. Now, I've been talking about the higher probability of one event occurring over another for some time. And basically, when you see the market internals begin to deteriorate in a trend, that suggests that the higher probability is you're going to see price correct to the internals. There's always a lower probability that the internals will correct to support price, but that typically is a result of a news event which changes the perception of value on the part of traders and investors. So basically, right now, we are at a very important support level for the spiders right at this 405 area. Now, I've also been talking about the fact that volume has been collapsing. Now, you can see this is definitely a daily uptrend. That's a nice trend right up to resistance at 410, going up to about the 418 area. But volume has been collapsing and falling off. Now, in today's trading, you can see that we do have a little bit of a tick up in volume. But if we're going to see a continuation of this price decrease, then we're going to have to see volume increasing as well. Along with that, along with this move here, market breadth has been collapsing, and market breadth was pretty negative in today's trading. 52-week highs minus 52-week lows have exploded down to negative 417, suggesting that there is more weakness coming into the market. Now, you can see with the NASDAQ a little bit different. This lower extreme comes in right around the 312 area, and it closed right at the 310 area. So it is below the lower support level, and that suggests that we're going to see a continuation of price moving lower in tomorrow's trading, mainly because we closed at the low of the day in all of the indices. In the Russell, same thing. You can see the rotation right through here on a daily basis. We broke through that 175 level. Next level of support is going to come in right around 172, this low, and then the next level is 170. Volume ticking up also. Breadth in the Russell absolutely collapsing through this whole thing. So the probability assessments, and that's really all that trading is and investing is, assessing the probability of one event occurring over another, keeping in mind that there are no 100% probability events. So basically, when we look at price development and we see, I think it's a little bit easier to see in the spider. So when you see this rally here, and you know where support and resistance levels are, and then you can monitor what's happening with the market internals, that gives you a higher probability of one event occurring over another, knowing that And as I've been discussing in the briefings, that based on the internals, that price is incapable of going much further, and that the higher probability is we're going to see some type of move back to the downside unless there is a news event. Now, it's not statistical, but the way I like to look at it from a psychological perspective is that when I see this happening, when I see volume collapsing and I see breadth collapsing on a rally like this, then I just kind of, and again, it's not statistical, but I just psychologically say, okay, there's a 70% chance we're going to see a move to the downside. But that leaves a 30% chance that I'm incorrect. So what I have to do now is look at what kind of information is the market going to give us tomorrow that is going to increase the probability that we're going to continue lower, or increase the probability that I'm wrong in terms of this, that we're at support, at or around support, and we're going to see another rotation back up again. So that information that we get tomorrow is going to be extremely important. Now, we did reach a point of being extremely oversold in the NYSE and in the NASDAQ. So that does give us some indication that there should be some type of pause to work off the oversold condition. Now, because we closed at the low of the day, that suggests that the market would have gone lower if it hadn't closed. So basically, I have to assume that, at least for my own trading, that we're going to see a continuation of the move to the downside, and that what I'm going to be watching for very carefully is a divergence in market breadth, because I know at an extreme oversold condition, which we are at right now, that it doesn't preclude the market from going lower. But what I have to be aware of is, because it's oversold, we may see a point where it is going to rotate back up again to work off this oversold condition, because we know that markets run and pause in all degrees of time. So that key is going to be market breadth. Lower prices tomorrow at the open with stronger breadth is going to suggest that we're going to see some type of a pause or some type of a rotation back up again. Lower prices tomorrow with weaker breadth than it was today, and it can go weaker. It could go another 7, 8, 900 points weaker in terms of NYSE breadth. Then it's going to suggest that this is potentially becoming a very impulsive move to the downside, and we're going to see some of these lower levels of support reached. Going to be a really interesting day tomorrow. Have a great night, and I'll pick this back up tomorrow evening.